Question 1. Based on the title search and examination process, title defects and curative actions. A title insurance agent in South Dakota discovers a cloud on title during the examination process due to a previously unrecorded lien. What is the most appropriate course of action for the agent to take in order to provide marketable title? A. Issue the title policy regardless, since the lien is unrecorded and unlikely to be enforced. B. Ensure that the lien is satisfied and released. Then update the title to reflect the cleared status. C. Offer an endorsement to cover any future claims related to the lien without addressing it directly. D. Ignore the lien, as the buyer will most likely deal with any future claims. Answer B. Ensure that the lien is satisfied and released. Then update the title to reflect the cleared status. Explanation: a cloud on title refers to any outstanding issues or claims that may impact the validity of the title. In South Dakota, the title agent's duty is to provide marketable title free from such clouds. According to South Dakota law, title defects must be resolved before issuing a policy. Ignoring the lien or issuing the policy without addressing it may expose the policyholder to legal claims. A prudent title agent would ensure the lien is satisfied and recorded to guarantee that the buyer receives a marketable title. Offering an endorsement, option C, could lead to future claims but does not resolve the immediate issue. Unresolved liens pose risks, and ignoring them, options A and D, is a breach of fiduciary duty. Question 2, scenario-based. Closing and settlement procedures. Prorations of property taxes, insurance, and other expenses. Mr. Rivera is purchasing a property in South Dakota with the closing date set for September 15. The property taxes for the current year have not yet been paid, and the seller has owned the property since January 1. How should the property taxes be prorated at closing? A. The buyer should pay all the property taxes, as they will own the property after closing. B. The seller should pay all the property taxes, as they own the property for the majority of the year. C. The property taxes should be prorated between the buyer and seller based on the time each party owned the property. D. Property taxes are not typically prorated in South Dakota. Answer C. The property taxes should be prorated between the buyer and seller based on the time each party owned the property. Explanation: in South Dakota, property taxes are typically prorated at closing, meaning they are divided between the buyer and seller based on the proportion of the year each party owned the property. Since Mr. Rivera is purchasing the property on September 15, the seller would be responsible for the taxes from January 1 through September 15, and Mr. Rivera would take on the taxes from September 16 through the end of the year. This prorated division ensures fairness in the settlement of financial obligations. Options A and B would unfairly burden one party, and option D is incorrect, as prorations are a common part of the closing process. Question 3. Based on legal and ethical responsibilities. Ethical conduct in title insurance transactions. A title insurance agent in South Dakota has a personal financial interest in a property transaction that they are facilitating. Which of the following actions is required of the agent to remain in compliance with ethical guidelines? A. The agent should proceed with the transaction without disclosure, as their role is purely administrative. B. The agent should disclose their interest to all parties involved in the transaction. C. The agent should withdraw from the transaction entirely, as any interest presents a conflict of interest. D. The agent should refer the transaction to their supervisor without informing the parties involved. Answer B. The agent should disclose their interest to all parties involved in the transaction. Explanation: South Dakota law and ethical guidelines require full disclosure of any personal interest that may present a conflict in a title insurance transaction. By disclosing their financial interest to all parties, the agent maintains transparency and helps ensure fairness in the transaction. Failing to disclose option A or referring the case without informing the parties, option D, would violate the agent's fiduciary duty. Withdraw from the transaction, option C, is not strictly necessary unless the conflict is deemed irreconcilable. Ethical conduct is critical in title insurance to prevent fraud or undue influence, and transparency is key to maintaining trust. Question 4. Based on the South Dakota title insurance laws and regulations. Licensing requirements for title insurance agents. In South Dakota, what is a key requirement for an individual to obtain a title insurance agent license? A. The individual must have at least 5 years of real estate experience. B. The individual must complete an approved pre-licensing education course and pass an examination. C. The individual must be sponsored by a title insurance company. D. The individual must submit proof of errors and omissions insurance coverage. Answer B. The individual must complete an approved pre-licensing education course and pass an examination explanation. To become a licensed title insurance agent in South Dakota, the individual must fulfill several requirements, including the completion of an approved pre-licensing course and the successful passing of the state licensing exam. Real estate experience, option A, is not a statutory requirement for licensure, nor is sponsorship by a title insurance company. Option C, while errors and omissions insurance. Option D is recommended for liability protection. It is not a licensing prerequisite. Question 5. Based on title insurance fundamentals. Types of title insurance policies. Which of the following types of title insurance policies provides coverage specifically for a lender's interest in a property? A. Owner's policy. B. Lender's policy. C. Leasehold policy. D. Reinsurance policy. Answer: B. Lender's policy. Explanation: a lender's policy protects the financial interest of a lender in the property, ensuring that the lender is protected against defects in title that could affect their ability to enforce the loan. This is different from an owner's policy, option A, which protects the buyer's interest. A leasehold policy, option C, provides protection to those holding a lease on the property, and reinsurance policy, option D, refers to insurance purchased by one insurance company from another to mitigate risk and is not directly relevant to the buyer or lender's interest. Question 6. Scenario-based. Deeds and conveyances. Types of deeds. Ms. Turner is selling her property in South Dakota. She wishes to provide a deed that guarantees she has not incurred any liens or encumbrances during her ownership, but she cannot guarantee the title prior to her ownership. Which type of deed should Ms. Turner use? A. General warranty deed. B. Special warranty deed. C. Quitclaim deed. D. Bargain and sale deed. Answer: B. Special warranty deed. Explanation: a special warranty deed guarantees that the seller, Ms. Turner, has not caused any defects in title during her period of ownership, but does not guarantee anything regarding title issues that may have arisen before she owned the property. This is contrasted with the general warranty deed, option A, which provides full guarantees covering all previous owners, and a quitclaim deed, option C, which provides no guarantees or warranties about the title. A bargain and sale deed, option D, implies ownership but offers no warranties about the property title. Question 7. Based on title insurance claims and resolution. Common title defects leading to claims. Which of the following is a common title defect that may lead to a title insurance claim? A. A recorded mortgage that has not been released. B. A properly filed deed of trust. C. A recorded easement on the property. D. A lease agreement between the current owner and the tenant. Answer: A. A recorded mortgage that has not been released. Explanation: a recorded mortgage that has not been released is a common title defect because it creates uncertainty about whether the mortgage has been paid off, and the lender may still have a legal interest in the property. This can prevent the buyer from obtaining clear title. A properly filed deed of trust, option B, and a recorded easement, option C, are not defects but rather valid legal instruments affecting the property. A lease agreement, option D, does not impact title, but it could affect possession and rights to the property. Question 8. Based on public records and recording systems. Requirements for recording documents in South Dakota. In South Dakota, what is required for a deed to be legally recorded with the county recorder's office? A. It must be signed by the grantor and grantee and notarized. B. It must be witnessed by two people and signed by the grantee. C. It must be notarized and contain a legal description of the property. D. It must include a survey of the property and be signed by both parties. Answer: C. It must be notarized and contain a legal description of the property. Explanation: in South Dakota, for a deed to be legally recorded, it must be notarized and must contain a legal description of the property. This ensures the document is valid and traceable in public records. While the grantor must sign the deed, the grantee's signature is not required for recording. Option A and witnesses, option B, are not necessary. A survey, option D, is helpful for boundary verification but is not a requirement for recording. Question 9. Based on legal and ethical responsibilities. Fiduciary duties of a title insurance agent. Which of the following best describes a fiduciary duty that a title insurance agent in South Dakota owes to their clients? A. A duty to prioritize the interests of their employer above all else. B. A duty to disclose only information that directly benefits the agent. C. A duty to act in the best interest of the client with loyalty and honesty. D. A duty to ignore any potential conflicts of interest as long as no harm is intended. Answer C. A duty to act in the best interest of the client with loyalty and honesty. Explanation. A fiduciary duty requires the agent to act in the best interest of their client with loyalty, honesty, and good faith. This means that the agent must disclose any conflicts of interest and prioritize the client's needs above personal or employer interests. Options A, B, and D contradict the ethical and legal obligations of a fiduciary. Ignoring conflicts of interest, option D, could lead to legal consequences and ethical violations. Question 10. Based on real property concepts. Types of property ownership. Which form of property ownership allows two or more individuals to own a property together, with each owning a specific percentage but without the right of survivorship? A. Joint tenancy. B. Tenancy in common. C. Tenancy by the entirety. D. Sole ownership. Answer B. Tenancy in common. Explanation. Tenancy in common allows two or more individuals to own a property together, but each owns a specific percentage that does not automatically transfer to the other owners upon death. In contrast, joint tenancy, option A, includes the right of survivorship where ownership passes to the surviving owners. Tenancy by the entirety, option C, is a form of joint ownership between spouses that also includes the right of survivorship. Sole ownership, option D, refers to one individual owning the entire property. Question 11. Based on liens and encumbrances. Types of liens. Which of the following is an example of a voluntary lien? A. Tax lien. B. Mechanics lien. C. Mortgage lien. D. Judgment lien. Answer C. Mortgage lien. Explanation. A mortgage lien is a voluntary lien as it is created when a property owner willingly takes out a loan using the property as collateral. Tax liens, option A, mechanics liens, option B, and judgment liens, option D, are examples of involuntary liens, as they are imposed by law without the property owner's consent. Question 12. Based on foreclosure process. Steps in foreclosure. What is the first step in a typical judicial foreclosure process? A. Issuance of a notice of sale. B. Filing of a lawsuit by the lender. C. Auction of the property. D. Redemption period for the borrower. Answer B. Filing of a lawsuit by the lender. Explanation. In a judicial foreclosure, the process begins when the lender files a lawsuit against the borrower to foreclose on the property. The court then oversees the process, which may eventually lead to a property auction. The notice of sale, option A, and auction, option C, come later in the process, while the redemption period, option D, is the time during which the borrower may reclaim the property. Question 13. Scenario-based. Claims and title insurance coverage. A buyer purchases a property and it is later discovered that a prior owner had unpaid property taxes that were not disclosed during the title search. Which part of a standard title insurance policy would typically cover this issue? A. Exclusions. B. Schedule A. C. Schedule B. D. Covered risks. Answer D. Covered risks. Explanation. Covered risks in a title insurance policy include protection against defects such as unpaid property taxes that were not discovered during the title search. Exclusions, option A, and schedules, and B, options B and C, detail limitations and exceptions but are not related to covering unexpected defects. Question 14. Based on legal descriptions of property. Types of legal descriptions. Which of the following methods is commonly used in rural areas to describe large tracts of land? A. Lot and block. B. Metes and bounds. C. Government rectangular survey. D. Platted subdivision. Answer C. Government rectangular survey. Explanation. The government rectangular survey system is commonly used in rural areas to describe large tracts of land, particularly in western states. The metes and bounds, option B, method is typically used for irregularly shaped parcels, while lot and block, option A, and platted subdivision, option D, are used for smaller urban properties. Question 15. Based on real estate transactions. Closing process. At the closing of a real estate transaction, which of the following parties is typically responsible for dispersing funds and recording the deed? A. The buyer's real estate agent. B. The seller's attorney. C. The closing agent or escrow officer. D. The buyer's lender. Answer C. The closing agent or escrow officer. Explanation. The closing agent or escrow officer is responsible for handling the disbursement of funds, ensuring that the necessary documents are signed and recording the deed with the appropriate county office, while the buyer's lender, option D, provides financing and the real estate agent, option A, assists in negotiations, neither handles the actual funds or recording of documents. Question 16. Based on types of estates. Freehold and leasehold estates. Which type of estate provides the holder with ownership of the property for an indefinite duration? A. Fee simple estate. B. Life estate. C. Leasehold estate. D. Easement estate. Answer: A. Fee simple estate. Explanation: a fee simple estate grants the holder ownership of the property for an indefinite period with the right to transfer the property at will. A life estate, option B, is limited to the lifetime of an individual, and a leasehold estate, option C, grants temporary possession without ownership. An easement estate, option D, is not an ownership interest but rather a right to use the property. Question 17. Scenario-based. Zoning and land use. A developer wants to build a multi-family apartment complex in an area zoned for single-family residential use. What legal process must the developer initiate to request permission to build the complex? A. Apply for a variance. B. Apply for a zoning amendment. C. Request a building permit. D. File for a deed restriction removal. Answer: B. Apply for a zoning amendment. Explanation: the developer must apply for a zoning amendment to change the zoning designation of the land from single-family residential to multi-family residential. A variance, option A, would typically be used for a minor deviation from zoning rules, while a building permit, option C, is a standard requirement for construction but does not change zoning. Deed restriction removal, option D, involves private restrictions, not public zoning. Question 18. Based on types of property ownership. Joint tenancy versus tenancy in common. In which type of ownership does the interest of a deceased owner automatically transfer to the surviving owners? A. Joint tenancy. B. Tenancy in common. C. Tenancy by the entirety. D. Sole ownership. Answer: A. Joint tenancy. Explanation: in joint tenancy, the interest of a deceased owner automatically transfers to the surviving co-owners due to the right of survivorship. Tenancy in common, option B, does not include this feature, and the deceased's interest passes to their heirs. Tenancy by the entirety, option C, is reserved for spouses and also includes survivorship rights, but only applies to married couples. Question 19. Based on easements. Types of easements. Which type of easement benefits a specific piece of land rather than an individual or entity? A. Easement in gross. B. A per tenant easement. C. Prescriptive easement. D. Negative easement. Answer: B. A per tenant easement. Explanation: a per tenant easement benefits a specific piece of land, the dominant estate, allowing its owner certain rights over another property, the servient estate. An easement in gross, option A, benefits an individual or entity rather than a property. Prescriptive easement, option C, refers to easements gained through long-term use, and negative easement, option D, restricts the use of the servient estate. Question 20. Based on an adverse possession. Requirements for adverse possession. Which of the following is not a requirement for claiming adverse possession? A. Continuous possession. B. Open and notorious use. C. Hostile claim to the property. D. Permission from the true owner. Answer: D. Permission from the true owner. Explanation: permission from the true owner negates the hostile nature required for an adverse possession claim. To claim adverse possession, the use of the property must be continuous, open and notorious, and without the owner's permission, hostile. If the owner consents, the adverse possession claim cannot be made. Question 21. Scenario-based. Escrow and settlement. A buyer and seller agree on the terms of a property sale, and the buyer deposits earnest money into an escrow account. During the inspection period, significant issues are discovered, and the buyer decides to withdraw from the transaction. Under typical escrow agreements, what happens to the earnest money? A. The seller automatically keeps the earnest money. B. The buyer forfeits the earnest money to the lender. C. The buyer may receive a refund of the earnest money. D. The escrow agent transfers the earnest money to the county recorder. Answer: C. The buyer may receive a refund of the earnest money. Explanation: if significant issues are discovered during the inspection period, the buyer may be entitled to a refund of the earnest money depending on the terms of the contract. The escrow agent holds the funds and will disburse them according to the contract's terms. If the buyer withdraws for a valid reason, the money is often refunded. Question 22. Based on real estate contracts. Validity of contracts. Which of the following is not required for a valid real estate contract? A. Offer and acceptance. B. Legal purpose. C. Consideration. D. Earnest money deposit. Answer: D. Earnest money deposit. Explanation: a valid real estate contract requires offer and acceptance, legal purpose and consideration, something of value exchanged, but an earnest money deposit is not a legal requirement for a valid contract. Earnest money is typically used to show the buyer's good faith, but is not essential for the contract itself. Question 23. Based on leases and leasehold interests. Types of leases. Which type of lease requires the tenant to pay a fixed rent plus a portion of the property's operating expenses? A. Gross lease. B. Net lease. C. Percentage lease. D. Ground lease. Answer: B. Net lease. Explanation: a net lease requires the tenant to pay a fixed rent plus a portion of the property's operating expenses, such as taxes, insurance, and maintenance. To gross lease, option A includes all expenses in the rent, while a percentage lease, option C, involves rent based on a percentage of the tenant's sales. To ground lease, option D, applies to land leases. Question 24. Based on deeds. Types of deeds. Which type of deed provides the greatest protection to the buyer? A. Quitclaim deed. B. Special warranty deed. C. Bargain and sale deed. D. General warranty deed. Answer: D. General warranty deed. Explanation: a general warranty deed offers the most protection to the buyer because the seller guarantees clear title to the property and will defend against any claims, even those that arose before the seller owned the property. A quitclaim deed, option A, offers no warranties, while a special warranty deed, option B, limits the seller's liability to their period of ownership. Question 25. Based on ownership types. Co-ownership. Which form of co-ownership allows a surviving owner to inherit the deceased owner's share without it passing through probate? A. Tenancy in common. B. Joint tenancy. C. Tenancy by the entirety. D. Community property. Answer: B. Joint tenancy. Explanation: in joint tenancy, the right of survivorship allows the surviving co-owner to inherit the deceased owner's share automatically without the need for probate. In tenancy in common, option A, the deceased owner's share passes to their heirs through probate. Tenancy by the entirety, option C, is similar but applies only to married couples. Question 26. Based on real estate appraisal. Types of value. Which of the following types of value represents the most probable price a property will bring in a competitive and open market? A. Market value. B. Assessed value. C. Investment value. D. Insurable value. Answer: A. Market value. Explanation: market value is the most probable price a property would bring in a competitive and open market under fair sale conditions. Assessed value, option B, is used for tax purposes. Investment value, option C, represents the value to a particular investor, and insurable value, option D, pertains to the amount of insurance coverage. Question 27. Scenario-based. Agency law and disclosure. An agent representing a seller learns that the property has a major plumbing issue that the seller refuses to disclose to potential buyers. What is the agent's legal obligation? A. Disclose the issue to buyers. B. Remain silent to protect the seller. C. Inform the buyer's agent, but not the buyer directly. D. Negotiate a lower price to cover the issue. Answer: A. Disclose the issue to buyers. Explanation: the agent has a duty to disclose material facts about the property, including known defects like plumbing issues, to potential buyers. Failing to disclose such defects could result in legal consequences. Protecting the seller, option B, would violate this duty, and negotiating a low price, option D, does not fulfill the obligation of disclosure. Question 20. Based on environmental hazards, hazardous materials. Which of the following environmental hazards is most likely to be found in homes built before 1970? A. Radon. B. Asbestos. C. Lead-based paint. D. Mold. Answer: C. Lead-based paint. Explanation: lead-based paint is most likely to be found in homes built before 1978, the year when its use was banned in residential construction. Radon, option A. Asbestos, option B, and mold, option D, can also be environmental hazards, but are not specifically linked to homes built before a particular year. Question 29. Based on real estate financing. Types of mortgages. In which type of mortgage does the interest rate remain fixed for the entire loan term? A. Adjustable rate mortgage arm. B. Fixed rate mortgage. C. Interest only mortgage. D. Balloon mortgage. Answer: B. Fixed rate mortgage. Explanation: in a fixed rate mortgage, The interest rate remains the same for the entire loan term, providing consistent monthly payments. An adjustable rate mortgage, option A, has a rate that fluctuates, while an interest-only mortgage, option C, allows the borrower to pay only interest for a specified period. A balloon mortgage, option D, has a lump sum due at the end of the loan term. Question 30. Based on real estate closing settlement statements. On a closing statement, which of the following would typically be a credit to the buyer? A. Earnest money deposit. B. Real estate commission. C. Loan origination fee. D. Property taxes due. Answer: A. Earnest money deposit. Explanation: the earnest money deposit is a credit to the buyer at closing because it represents money that the buyer has already paid. Real estate commission, option B, and loan origination fee, option C, are debits, meaning expenses the buyer must pay. Property taxes due, option D, may be prorated between the buyer and seller, but would typically be a debit to the buyer